Mark, to be fair, the stock may be off by 7.5% or so this morning, but if you look at a year to date, that stock is up by about 87%. So there was a lot of expectation and a lot of buildup in the shares heading into it.
Yeah, you're exactly right, Becky. I mean, when you do an investor day, you usually go out, you talk about the company's strategy, you announce either new products or services, and you show them, and then you lay out very concrete financial targets, whether it's revenue growth, margins, profitability. And clearly in this event, they only did the first thing. That being said, they did lay out a lot of enablers and gave a lot of content on the manufacturing and engineering efficiencies that they're putting in place to reduce costs, which is key to Tesla continuing to grow and deliver, more affordable products off the next generation platform that they talked about.
Right. I think another key point was that Musk introduced a lot of the other top executives at Tesla, and that's certainly because of the questions that have been asked about his ability. He's been spread so thin by all the other companies he's running, and especially how much time that Twitter seems to have taken up from him at this point. I guess this, to me, even though it may not be what a normal company might be doing at an investor day, it seemed like more normal than the usual Tesla investor day, I think. He didn't make these grand proclamations. He didn't promise things that there's no way you're going to be able to deliver.
You're exactly right, Becky. This was more a traditional kind of investor day. To your point, they trotted out a number of executives that they hadn't shown in any previous presentations, to really take away at least some of the concern that they have about Musk and, the fact that he's, distracted maybe by some of the other business ventures. So they showed, or they tried to show, obviously, the strength of the bench. But they talked about meat and potato kind of things in the auto industry around, how they're driving costs down to improve their margins, what they're doing in terms of supporting the infrastructure for charging, and talking about, in very vague terms, new products that are coming down the pike. So you're right. Compared to previous presentations, it was dialed down about a level of 5 to 10.
Okay, and what has to happen next? I mean, everybody keeps talking about all the competition that's out there, but it's hard for anybody to kind of catch up with the gains that Tesla already has, the first mover advantage and a lot of the research that they've done. I mean, what do you think this market for EV looks like a couple of years from now?
Well, I do think, to get mass adoption, you have to get the pricing down to, the $30,000 to $35,000 range. That's where the market is really going to take off. And it's very interesting. You got Tesla, which started out as a software and a battery company, and is becoming also a manufacturing company. On the other side, you have the established car makers who are basically manufacturing and engineering organizations trying to become software and battery companies. And so the key is going to come down to who wins is around appealing product and around, the software or the user interface. It's around cost leadership, and it's around consistent execution. And Tesla right now is one generation ahead of the other automakers. But automakers like Ford with their Mach-E and Lightning, and Hyundai with their Ioniq vehicles are starting to make a lot of progress. So I think it's going to be very interesting, but Tesla still has the leg up on the competition. And I think they demonstrated that yesterday.
Where's your money on all of this, though, if you had to pick a winner a couple of years from now?
Well, I don't think there's going to be one winner. There's going to be a number of winners, and there's going to be a number of losers, because when you look at the adoption of EVs over time, I mean, this is a huge addressable market. In the next couple of years, you're going to see a global market of about 100 million vehicles. So I think you're going to see, businesses like Tesla, which are going to continue to be either the leader or amongst the leaders. You have businesses like, General Motors. They're coming out with a lot of products in the next 18 to 24 months. They have to prove execution. Ford, I think, is doing a very nice job with their new EVs. And, Hyundai, Kia. So I think there's going to be a number of winners and not just one.
Mark, if you had to look, I mean, some of the proclamations that we have heard, though, that there has to be $10 trillion in spending, that we should get to all EV vehicles and all electric vehicles, those still seem a little crazy to me.
Well, you have to look at the time frame folks are laying out. If you look at what Tesla mentioned yesterday, they want to get to a run rate of 20 million units of production by the end of the decade. I don't see how that's feasible when you look at not only the capital expenditures involved, but you have to get the supply base up and running. You have to be able to execute in a very tight time frame But over the arc of time, I think you're going to see the entire industry, have a number of stranded assets from as ICE vehicles kind of melt away over time. But it's going to take a long time. But this transition is happening. And the question is, what's the cost, and are investors going to want to provide the capital?